Good day everyone, welcome back to Fighters Trading Channel. Today we are doing the daily market analysis for the 26th of February 2025. Today is Wednesday and analyzing our potential movements in the markets and where we could potentially capitalize as the markets play out during the day. So, starting with NAS100, looking at the movements that's happened over the past week. So, we've already spoken about the drop in the market, which is continuing. I'm looking for the bears to continue all the way down to 20,700, as I mentioned in previous analysis. And right now we're in a bit of a correction move, so that provides us with an opportunity to get into the market. So coming down into the lower time frame of the 1 hour, where I'm anticipating a break or a potential bullish signal where I could then capitalize on a short position would be right here at 21,225. The reason why I believe we could get a potential signal off this level is it is a break and retest level. Price had previously pivoted off this point, then moved down, broke below, and now has come back and could potentially retest this zone, and we could have an entry here to the downside. Now, looking at RSI on the 1 hour, we can see we're below 50, which is good. That adds a level of confluence to our trading. The one thing that does concern me is the broken trend line. However, this has been a very, very tight trend line, so it makes sense that the market does need to extend a bit before it moves down. However, my views on this pair is still very much bearish. Now, in terms of placing stop loss, I would have to see where the pivot point is, because placing it here with the stop loss above, it doesn't give me a very above the previous pivot point. Doesn't give me the best risk to reward ratio all the way down to the support level of 20,700. Yeah, it's just a 1:2.6, which is not relatively bad, to be honest. So yeah, I would actually like a smaller stop loss, but for now I would say the stop loss, in the best case scenario, price doesn't move up to 21,400, and you can get a pretty banging risk to reward ratio from there. But for now, we have not received our signal just yet. I would like to see a firm close on the 1 hour on the behavioral time frame, or my entry time frame, to at least signify that, at least provide the signal that the bears have taken control. So until that happens, we will just play the waiting game. We'll keep this on a watch list. Taking a look at US30. US30 has been moving very much in a consolidation zone between 43,755 and 43,370. We are approaching the resistance zone, so I'll be looking to short this pair. Yeah, from right there, I'll be looking to short it. We haven't gotten a short signal on the 1 hour yet, but once we do, I'll be looking to go short. I'll be placing my stop loss just above this pivot point there, right there, and then awaiting a trade all the way down. 1:3 risk to reward, or 1:2.87. Now, that being said, I do believe price can still move further up and retest the zone here at 43,950. The reason why is this is a major break in retest zone. It is more than likely that after this consolidation, price can spike up, go for a liquidity grab at this particular level of 43,950, and then move down. I am still very bearish, cautiously bearish on the US30 and NAS100. However, that being said, I think that is the most likely move, a strong liquidity grab before a strong move down, as the market does need liquidity for further movement. So that makes sense in the context of getting down to this level of 41,800. So I will have to see extremely strong signals in this market, strong bearish signals in this market to signify that the bears have stepped in and we are going to have longevity in the bearish trend, say for at least a week or 2 weeks, and comfortably trade that all the way to the support of 41,800. But yeah, until then, just on the watch list. Looking at gold, so gold finally had some movement yesterday. Like I mentioned, we had a bearish rising wedge, which was forming. That wedge was finally broken yesterday at around 4 o'clock, or 3 o'clock, actually, or 5 o'clock. Yeah, so that bearish wedge was finally broken. The consolidation phase for the longest amount of time, and then, like I stated, the trend needed to break down. It needed to grab liquidity, and it has. It is broken down. The price has come back up at 3 in the morning during the Asian session. It is tapped back into that break and retest zone of 2924, and I expect price to make further downsides. Now, further downside, to move further to the downside. So I'll be looking for shorts on this pair. That being said, my support remains at 2881. So I do expect there to be some type of reaction from that level once it gets there. But trading super cautiously because I know that this pair is still very much overextended. That gold is still very overbought. And we are waiting some type of strong fundamental event to give us a long-term directional bias. So trading very much to the downside with caution. I'm grateful that the trend has finally kicked in so I can start looking for some shorts. I'll be waiting for price to tap back into this level of 2924 or 2925. As you can see, it's very close there. Looking for a short signal on the 1 hour, finding it on the 15-minute for entry purposes, and then riding that bearish trend all the way down to the support level. I have no direct level I could tell you where to place your stop losses just yet, so I would just say trade with caution. Expect to trade from this level of 2928. Place your stop loss maybe at 2946, but it doesn't give you a very good risk to reward ratio. So again, trade with caution. So Bitcoin, interesting. Bitcoin has broken below the consolidation, below the support of 9150, 91,500, and has closed there on the daily time frame. Very, very strong bearish movements coming out of Bitcoin now. So if you are trading Bitcoin, look for shorts, and if you are holding longs, just be intelligent about it. If it's time to sell, it's time to sell, and then buy back in at a discount. So take your profits, run, and figure out a better place to hop back into the market and ride the wave all the way to the top. Yeah. So Euro USD, as I mentioned, trading in a bullish trend and finding resistance at 1.052, has not broken yet. So we have no definite market directionality in which we can trade, and for that particular reason, we are staying out of this market. Euro JPY, still very much trading that consolidation phase, has not broken beyond the resistance nor the support of 156.16, and then the resistance of 157.17. So still very much in that range, nothing really to report, and I'm not looking to take unnecessary risks. Moving on to USD JPY, we can see a bullish bullish falling wedge. Sorry, blanked out there for a second. Bullish falling wedge that is forming, and yeah, we can see the zones are getting tight. The lower lows are getting closer together, and the lower highs are getting closer together upon a very strong support level of 149.5. So expecting a break to the upside really soon on that pair. As for AUD JPY, still making lows, but not comfortable trading this pair when the yen is still finding its feet. So yeah, until the yen really figures out its directional bias within the short term, its market directional bias, I will be staying out of yen pairs. And same goes for CHF yen. I mean, we can see we are very much in a consolidation phase between that double bottom of 166.15 and then the resistance of 167.5. So yeah, that's our pairs ahead. So again, just to recap, with NAS100 US Tech, we are looking for shorts. We can currently see an indecision candle, long wick indecision candle. So we do have a sort of retracement going on here. Best case scenario, we get a push down. We get a short position which forms from current price, current price level, which is 21220, or potentially, I think this zone's already been tapped at 21370. We could potentially see a position from there, or price could come all the way back up and retest at 21.600 and drop from there. Now, it's all about reading what price is doing at these levels, and I apologize for earlier analysis, but just taking a look at the charts right now, I'm actually just observing the indecision candle which is formed, and I'm seeing that the bulls are stepping back in. I don't think they're stepping back in for price to move all the way back up to 22,100. I actually just think that it's a correctional phase before price continues on its impulse movement to the downside. That being said, looking at the 4-hour chart and the longer term time frame, the 21,600 level seems like the most likely choice for price to move to and to retrace from. And we can also see potential levels at 21,380. So yeah, those are the important price points to take to keep your eye out on, and our market directionality remains bearish. We are in an overextended region on the 4-hour for RSI, so it makes sense that we need a bit of a deep retracement. We need a liquidity grab before the bears kick back in. And then yeah, my analysis for US30 remains the same, where I do expect price to come all the way back to 43,950 and continue moving downwards from there. Market directionality for this pair remains bearish. And then of course gold finally breaking that bearish rising wedge. I expect further downside movements with retest of 2925, break and retest of 2925, and then further move to the downside. So I hope that you enjoyed today's daily analysis. I do apologize for getting a bit lost in my thoughts. Still suffering with the flu today, but hope you enjoyed that. Hope it was informative. Please do reach out if you'd like to analyze some pairs together, or if you have any suggestions for the page. And as always, this is not financial advice, but rather my personal opinions of the markets. Anyways, I will catch you in the next market analysis video, and this is FIDIS Trading Channel. I'll see you next time. Cheers.